Good morning, everyone. So far, I see one, two, three, four, five trades. If you're using the Trade Scalper, so far up to 11:30, we have five, six trades. I'm going to show you the trades as they occurred. Before we continue, make sure that everyone is clear on the risks involved with trading. Please don't trade with funds you cannot afford to lose. Trading is risky. So to begin, we're looking at the Emini SP. I'm using NinjaTrader 8 here with the Trade Scalper software. And the software provides these signals for you on the chart. You go in and you place the trade on your Superdome or on your Dome or Chart Trader, and you place a trade long or short. Since this is scalping, any type of trading really doesn't matter if it's scalping or not, but you shouldn't be trading whenever there's a news event. So it's important to know when these news events occur. Typically they occur at 8:30 Eastern Standard, 10 o'clock Eastern Standard, and then the FOMC is typically at 2:30 Eastern Standard. Sometimes you have some FOMC at 12:30 in the afternoon, right around lunchtime, but always refer to an economic calendar, or if you haven't downloaded the DayTradeToWin news indicator, you can download it on DayTradeToWin.com, or if you are a client of DayTradeToWin, a member of our trading community, you can go ahead and download the news indicator as well. So this trade here at 10:15, about 10:15, 10:16, has a 31.1475 to go short. Remember, it's scalping, so we're only taking three ticks. We have a small stop and a small target. So this trade, 31.1475, was successful. Now for the second trade, it's going to be a long at 31.13. Now, the course and the training explains to you how the method works, so you should be and you should know when this long is going to occur. The software will provide you the entries for you automatically. You have to go to your Dome or your chart trader, place the order. Remember, the target is three ticks. The stop to protect yourself is also very important. You should never trade without a stop. I come here, I'm going to use a market if touched order. So when this touches the price 31.13, I'm automatically filled. Now I may have one tick of slippage because that's what a market if touched order does. It initiates a market order once that price is touched, which it did. You see 31.13 and a quarter, which is one tick of slippage. And that's fine. I still have my target. I'm going to place a stop and a target in order to protect myself and get out of this trade as soon as possible. With scalp trades, you should not hold on to these orders for an hour. It should be a very quick in and a very quick out. Now, for some traders who like to swing trade, it's much larger stop and larger profit at the same time, and you're holding on for trades for much longer than what we're doing here for scalping. So remember that the type of trader that you are depends on the time frame that you use. The smaller the time frame, the smaller the target, and the smaller the stop. I have my target for three ticks, and I have my stop as well placed to protect myself. Again, you're not going to risk a lot, and I want to see this target be hit, and I want to be out of the trade, and then I'm looking for the next trade. All right, so the target was hit, and I'm out looking for the next trade, which happens to be the third trade that I'm showing you, 31.16 long. Unfortunately, I wasn't paying attention. I missed out on this trade. This trade would have been entered correctly at 31.16, but I was unable to catch the trade. But this is the third trade, and those of you who have the Trade Scalper have this trade on your chart, historically showing that it occurred. The next trade, the fourth trade of the day, is another long position. It's 31.1850 long on this trade. And again, the goal is to make three ticks, have a stop that protects you from the market going against you heavily. I entered at a little bit better price, but anyone who would have taken 31.1850 still would be able to make those three ticks because the market actually went to four. So you have a three tick target, and I want to see this immediately occur. And it did. It immediately happened. It gave the target. I'm showing you here on the dome. Sometimes you could use the chart trader if you like a chart trader type of application, or the dome, which I like to see here as well, showing me the market moving and the number of contracts. 3 ticks once again for a 3 tick target. All right, so there is the 3 ticks. And again, you can test this method looking back in history on your charts, how well it does, and using it on the markets that you like. Now, the fifth trade of the day is going to be another long trade. The Trade Scalper software gave a 31.19 entry to go long, and I want to get as close as possible to that price. And that's why I recommend a limit order or even a market if touched order. But something very important a lot of traders fail to do is they get a very bad fill by chasing. And in trade number 3, the third trade, I let it go because when I realized the market had run away, I'm not entering at that very bad price or that price after it ran away where I'm not getting the best price possible. So you always want to get a better price whenever you enter into the market. Within a tick, it's acceptable, a limit order, a market if touched order. So I'm showing you here a limit order entry, which means I want this exact price or better or nothing. If it's going to give me a worse fill than 31.19, then I don't want it. And so this is why I'm using a limit order, because I want to avoid any slippage. Always try for a better price. Now, when I get filled here at 31.19, the rules are exactly the same. Try to make this as objective and robotic as possible. You want to enter at 31.19. You want to have a 2, 3 tick, 4 tick profit, but basically that's all you're going for under these kind of conditions. And you want to have a stop that protects you. So 31.19, no slippage because I used the limit order. And now I wait for my stop. I wait for my target. I don't want to hold on to this for an hour. So that means that a scalp trade is typically less than 10 minutes, maybe 15 minutes, but that's really a long time when you're thinking about scalping. The market should not be that slow. Okay. Now, as we progress throughout the day, as we get into the middle part of the day, if you haven't watched the ABC video where the B part of the day is the middle part of the day, things typically slow down. So if the market slows down and it's just so slow that you can't make anything out of the market, then switch markets, stop trading. It's not worth your investment. You need to trade when there's a little bit of liquidity and volatility. Now, I'm filled, market if touched, I'm out of the trade, I'm finished, I have to cancel my stop, and now I should be done for the day. I'm not going to take any more trades. But for those of you who do want to continue trading, keep an eye on the liquidity, the volatility. Email me if you have any questions. Join the next mentorship class, which includes the Trade Scalper, the Atlas line, and the At the Open, and all the other programs like the Roadmap, the Blueprint, the X5. And I will see you at the next video. Hopefully you guys enjoyed. Until next time, take care.